Hello guys, actually just want to show you guys my strategy. But before I start this video, I would just like you to click the like button and subscribe to the channel so we can grow together. So this is basically my strategy. So first thing you're going to do is to draw the how the pattern works is this. Then first of all, we need market to be trending. You need to check the overflow of the market that time frame to check if the market is bullish or if the market is bearish. So you need to check. You need to make it. You need to do a top-down analysis on the higher time frame. So whenever you discover that the market is bearish, then you'll be looking for a sell setup. So, but actually, if the market is bullish, also be looking for a buy setup. So once you discover the directional bias or the overflow of the market, then what you now do now, you'll be expecting another block in a higher time frame where the market was actually trading into. So, but first thing you do is to make sure that you see a liquidity in the market. Unlike now, the market has shifted structure like this. Then that's the first shifting structure. Then you make sure you see a liquidity below or above. So when you see liquidity, then make sure that the market shifts. Sometimes the market used to shift structure twice. Sometimes it will not shift structure twice. So once it shifted structures for the second time, what you now do is be expecting it to take out the liquidity. Once it takes out this liquidity, sometimes there used to be an order block from the right or the left hand side. So once you see the order, once this liquidity is out, then expecting you to tap on that order block. But before the order block, there used to be, if you want to make sure you want to be assured that the market is healthy. Sometimes the market usually bring out a fair value gap or a volume imbalance or a normal gap before or below the liquidity. So once the liquidity is taken out, it's either the thing is approaching to the fair value gap or the volume imbalance or is coming down to the other block. Then once the liquidity is out, then it will just come down there and tap on that place. Then this is where I'll be expecting a buy or a sell. So after the liquidity has been taken out, then I'll be expecting a buy or sell from the other block or the fair value gap below it. Then boom, this is my entry. Then I'm expecting it to take out this high because we have sell side and a buy side liquidity. So once the sell side liquidity is taken out, then taps on your POI, then boom, you're expecting your TP will be up to the buy side to sell side liquidity. You're expecting to take out the sell side liquidity from this place, then it should be your TP. Either 1:2 or 1:3. Sometimes I used to catch 1:3 to 1:4. Then once it's out, TP will be here. Then you're expecting your TP to be here. So you don't need to put your TP more. You just adjust it to the sell side liquidity. Then this is actually how I trade a setup. The setup is basically simple, so it's easier to spot out. So you don't need anything complicated. So this is where you're expecting a buy below the other block and or any fair value gap. But that fair value gap will give you a confirmation that the trade is actually healthy. So you're expecting the buy from that place. Boom. This is your TP and your SL will be below this place. Then boom, take it out. So let's just go to the chart and see how it works. So I also have a setup on GBP USD. So this is my setup. So as I said before, you need to go to the higher time frame to check the overall flow of the market. So this is actually the higher time frame. Then based on what I discovered from the chart, I discovered there's a fair value gap or a volume imbalance at the top. So you can see the market took out this liquidity. After taking out this liquidity, then it moves up and now taps on this volume. Let me zoom out. Taps on this, but sometimes it doesn't respect the volume. You just go straight to the other block. You can see when you zoom, when you discover this is another block. Taps on this other block here. It just taps on this other block, then start falling. See, Immediately once it tapped there and it started falling. So now, since we have discovered that the market is actually bearish, because you can see this is actually another shifty structure here. There's another shifty structure to this place. You see, shifted structure to this place, telling you that the market is bearish, no longer bullish again. Then after stepping on that, you can zoom out or go down to the lower time frame to see the next move of the market. I just scale down to the 4-hour time frame. Then you will zoom in or zoom out to see it clearly. So you don't need to be trading blindly. So you just need to see everything and see how the thing works. So see, this is actually my bias now. So I've seen a shift in structure down to this place. Then this is actually my order block. So this is the order block. So this other block now, I'm expecting it to come to this place, to this other block, and tap in. This is my POI, and this is the liquidity. You can see this actually the alert. I've set an alert, so I'm expecting it to take out this liquidity. Once this liquidity is out, then I'm just expecting it to tap on this other block, then start falling. Your SL will be above this place, the protected high, and your TP will be here, or you're expecting it, because I've seen when you go back, when you scroll and go back, you see this is second high. But if you don't want to be long to do, like you don't want any story, you just need to put your adjust your TP to be here on this low. Then I'm expecting these liquidities and all those things to be out. This is actually my shifting structure. I'm expecting this liquidity to be out. Once this liquidity is out, then tap on this my POI and start falling. So sometimes, most of the times, it doesn't respect the fair value gap. So that fair value gap is just to show you that the market is healthy. That fair value gap and the other block usually push the market, and the liquidity push the market up to tap you in, then started falling. So that's how this setup actually works. So higher time frame is actually the key to everything. So you need to zoom to go to the higher time frame, to the weekly or to the daily time frame, to check the direction, to check the overflow of the market, see if the market is healthy, is bullish or bearish. So these are actually my expectations from you. I just want to show this little tips to you guys. The video is getting long. I don't want to make the video to be long, but I believe most of you would have captured this. So please be expecting my next video, and I would like you guys, if you find this video useful, I don't need to tell you, find it very useful, you just go to click the like button here and subscribe, so I will be able to bring out more videos like this. Thank you so much.